Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 11th of August, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The overall stance overnight has been towards allocation to risk, with the Euro stocks and the DAX leading the pack of products that I watch, followed by the Russell and crude. The weakest of the bunch is the British pound this morning, followed by the euro, as well as the U.S. Treasury bond, the 10-year note, and the Bund being almost at even. Volumes overnight have been very low, as we've seen over the last few days, and overall the market is kind of in a holding pattern. A half hour ago, we got initial jobless claims, came in at 266,000 versus 265,000, so slightly worse, just by 1,000. Continuing claims, 2.16 million versus 2.13 million expected, also slightly worse. And then July import prices came in at plus 1% versus negative 4%, and year on year negative 3.7% versus negative 4.3 expected. This morning, we also had Alibaba report, which is not a huge stock, but it does have some contagion effect on Yahoo and various others. It reported 74 cents versus 61 cents, so a very strong earnings report. Revenues of 4.84 billion versus 4.61 billion. Apart from that, the calendar's fairly clear. Not much else to report there. As far as what we're expecting this morning, there isn't anything that I see on the calendar that is a big play today. Again, we had our initial claims and import prices. We're looking for EIA natural gas at 9:30 Central, 10:30 Eastern, and that's really it. No speakers. There's a big 30-year, not a huge, but $15 billion 30-year bond auction at noon Central, 1 Eastern. So the calendar's fairly clear. The market is fairly quiet, and overall, there's not much that is likely to drive us this morning. Even attendance is very low today on this Trader Bite. So that's to speak. That's to speak of what we've got. It is the summer. This is fairly typical. Don't panic. So with that being said, let's follow our habit of looking at what we expected yesterday. I want to remind you today, in fact, speaking of habit, I'm speaking about trading habits this afternoon at 4:30 Eastern, 3:30 Central on Futures IO. The link for that is in the description of the AMA on YouTube. You can grab it from there, or you can go to twitter.com/FuturesTrader71 to grab the link from there. It's being posted on my Twitter feed. Here's what we expected yesterday. This is the primary expectation was for CHOP. Why? Because we were opening in value in range yesterday. The expectation was for it to open choppy, potentially test up to 2181.75. The expectation, and what's a 2181.75? That's the doesn't look like it's 1080p, but 2181.75 is the point of control left behind on Tuesday, but the overall expectation is that the market is likely to rotate lower and test below the 2173, this line that I drew on this video yesterday. You can watch this video yourself. We're about 14 minutes in. And then we were looking for test 2171, and then the big area we wanted to see tested, we would have liked to see tested, and as I said yesterday, a drop is the ideal situation for intraday traders, as it introduces a little bit of volatility and some movement in and out of the market, which is what we need um, to be able to participate and make money. And so Okay, so I'm tired of this crash is imminent crap. So anyway, so we were looking for a test down into the thin part of Friday's range right here, and a continuation, and then potentially a continuation down here. And then, of course, once it gets through here, it would have tested this whole MC range. The expectation, of course, is for it to come back and look for the MC point of control, 2177 again on the following sessions. We didn't get into that, but that is the normal habit of the market. This is our secondary hypothesis, failure to go lower, and then a return, a push higher, and a break out of this 3-day balance, and that didn't happen. So Hypo 1 was in control yesterday. Very, very, very tough to sit through the morning yesterday. Very slow, dead market. Our volumes were very, very low. But then we got the break, and you can see on this chart here, the break had volume that came in at 40,000 versus the at 95,000 versus the 40,000 expected. So this move here was very meaningful. The drop on the crude oil right after the crude oil announcement, that drop was very meaningful, and we ended up seeing the standard continuation move. We had an impulsive move, pullback, continuation move, and then now we are in a corrective stance, and we're back to, as I had mentioned before, we're back to the MC point of control, which is right here. Okay, so let's start out by looking at what it has done, what it is trying to do, and what it has done is it's popped up on the non-farm payrolls. It has retraced and has been stuck in the non-farm payroll acceptance range, which remains, the point of control remains up here at 2177 and a half or so, 2177 even, which was the point of control from the non-farm payrolls. We pushed higher out of this range, but have kept coming back, again building a high volume node, as you see right here, another high volume node on top of the MC point of control. And then yesterday we built another high volume node before the break and shifting the point of control down. The low yesterday did not look excellent. It looked fairly weak, but the market has been pushing back on every drop. Now let's extend this profile forward so we can see what impact this additional volume has. And it does look like the market has not completed its exploration to the high side. As you can see, this side here does not have a clean taper. Why not? Because of Tuesday's trading. It put up this high volume node at the very, very high, and has not tapered off, and found that excess on the buy side for sellers to come in with confidence. So today, even though we've tested below, today we're starting out right against the MC point of control. The MC point of control stays at 2177. The overnight point of control is at 2177.50. We're trading 2178 and a quarter. 2179 is the overnight high. So there's just a mess of stuff here, and that's what happens when the market slows down or goes into a tight balance. You start to get it starts to get very messy. Looking at the rotations yesterday, just out of interest, this is the part here that was pretty difficult to sit through. There was nothing going on. Once we pushed down out of this small cluster, we were unable to get back into the opening swing. So you could see multiple attempts at the opening swing here. Couldn't get back up above. It showed some weakness. This last one here pushed against the mid. Then we get an impulsive move. Was not part of this move. Did not participate in this move. However, as I talked about in yesterday's AMA, by the way, for those who didn't attend the AMA, it is the recordings posted on my Twitter feed again, twitter.com/futurestrader71, so you can watch it. And I explained in the AMA yesterday the discussion that we were having in our chat forum about this this setup for a short trade for a continuation lower, and that finally worked out. It's nice to see the auction resume once the market releases. However, once we put in this low at 2167-ish, 67.75, the market pushed back up to form this, to back up to the point of control, has put in a higher low, and has pushed into the close into a higher high. So what we have here is essentially a classic impulse pullback, continuation, correction, and then confirmation, and then continuation in that direction. And that's what I'm expecting this morning. This looks like an inverted head and shoulders. This could happen the other way, and it could be an impulse pullback, continuation, and then the beginning of a correction, failure, and then a push the other way. That's basically what's happening here. It's an inverted head and shoulders starting to form. Let's look at the overnight as we form our hypotheses here. So the overnight is fairly interesting in that it basically reversed yesterday's trading. So yesterday we had a minor HVN and a bigger HVN down below. The overnight has a minor HVN below and a bigger HVN, very boxy. So there's no consensus here. Very boxy HVN towards the high. We have a double top at the high of the session. The volume at 158,000 is lower than what we would consider usual or most common, and we are pushing against that overnight high. So I'm expecting that overnight high to expand higher this week, high to go. So we're starting to look at the potential for a pushback towards that point of control at 2181.50. Remember, there was an LVN here ahead of it yesterday. So what the overnight session is forecasting is that we would take back the selling as we have in these balance ranges for a while, and to start exploring higher again, which again forms a boring trade. Just a quick review. Since July 12th, I've adjusted this MC to just be on July 12th because we didn't push further. I had it going back to the 8th. But if you look at the MC here, the key element below, the key price to test below is this 2160.75. And this point of control has been fairly persistent. If we go back in time and push this profile back and look at that black line on this profile, it's fairly persistent at 2160 and hasn't shifted very much. I expect this area to get tested. I was hoping for it to continue, for us to have a small pullback today and to continue lower to keep the market somewhat tradable on an intraday basis. But for now, this 2160.75 test that I was getting excited about yesterday doesn't look like it will likely materialize in today's session. Again, we're in a noisy area here. We're back at the high volume node. At the high volume node on the profile, on the main profile. So if we look at this, we could see, you can see here that we're in a high volume node on this main profile. and that's where we're stuck. So expect, and we're up against the MC here, the MC point of control. Expect another choppy open and a fairly quiet market this morning yet again. It's nice to see those breaks after the chop, but for now, there's not much more that can be predicted based on the action that's in front of us. So, what are the hypotheses this morning? Again, we are opening out of value in range. We're against a weak high. The expectation is this market is likely to continue higher on the open to take out this 2179. There may be a potential for a pushback down to retest the 2177 MC point of control, but I'm expecting a wide-ish kind of play for today. I know I don't draw this snaky kind of market often, but this is what's setting up for today. We have the LVN, the areas to watch. We have the LVN at 2180.75 and a potential test later on of 2181.75. That's the primary hypothesis. The secondary hypothesis is a break of the overnight high, an attempt to push higher, failure again at the same price as yesterday, in the same area as yesterday, basically taking out yesterday's high and then failing back in to start moving towards this LVN zone down in the 21 73.50 74 area, which is this double bottom right here, almost a double bottom area. So that's what I would be looking for. That's what my plan would be on failure to seek higher prices on hypothesis 2. So that's that. Again, I want to remind you this afternoon, Futures IO, look for the link on Twitter. And hopefully you're being very, very picky and managing your risk well, so that when the market starts moving again, you have an opportunity to jump on. You have the funds to be able to jump on and take advantage of it. Good luck, and I'll catch you this afternoon, 4:30. Take care.